You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody, that music means we are back on this Thanksgiving Eve Wednesday. Time to rock out and talk some futures on the Futures Rundown. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are binging or mainlining these days. Hope you're having a good travel day. If you are indeed one of the many, the legions who are traveling, maybe you're listening to this in an airport lounge, waiting to board a flight, or maybe you're home cooking feverishly. Either way, hope you're having a good start to your week. Reminder here at the top of the show, make sure you're subscribed to the full network, wherever you get your favorite podcast. Otherwise, you're missing out on a ton. And of course, if you don't want to miss out on everything, make sure you're checking out the Pro, theoptionsinsider.com/pro. Awesome early holiday options oddities and pro Q&A coming at you yesterday, which inspired a heated debate, which we'll get to a little bit later in the show. But first, it is time for us to head on into the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody, welcome to the Trading Pit, the portion of the show where we break down all the action lighting up the futures markets this week. You know, given the fact that it is a shortened holiday week, we actually are seeing a fair amount of action lighting up the tape out there this week. Let's kick things off. Everyone's hopefully in a bit of a celebratory mood right now, even though if you're starting to be surrounded by family, maybe not, or maybe if you're busy cooking or having a bad day traveling, maybe not. We'll see what we can do to lighten the load. Let's kick things off to the green, to the light side this week, listeners. Kick it off, number 5, a little bit of a ray of sunshine for you crypto hodlers out there. The bloodletting, at least for right now, has abated. ETH is up on the week, so there you go. It's 3%, but take what you can get out there, listeners. It's better than selling off another 10+% this week. ETH coming in number 5 to the upside this week. Number 4, oh, how sweet it is. It's sugar. Maybe you're mixing it into your cranberry sauce. As we speak, listeners, sugar coming in at number 4 this week, up 3.27%. Cranberry sauce. Hint, hint. We'll come back to that a little bit later in the show as well. Number 3 to the upside. Where's Uncle Mike when you need him? It's silver, up 4.3% this week. Number 2, out to the equities we go. But not to the big dog S&P, to the S&P mid-cap. We don't talk that one too often, but having a good week this week. Up nearly 5%, 4.79%. And then leading the pack this week, our old pals, small caps, roaring back to life this week after getting, I think the technical term is shellacked last week. Up about 6.25% so far this week. So a good week for all things small caps. Now we go to the downside. What is not having a great shortened holiday week, listeners? Kick it off in my least favorite complex. Yeah, it's dairy. Class 3 milk coming in number 5 this week, off 2.9% on the week. Number 4, it's our old pal, the Widowmaker. It's nat gas, giving up about 3 3/4 points this week for the number 4 spot. Number 3, back to my beloved dairy. It is Dry Whey, off nearly 7.5% this week for the number 3 spot. Number 2, heating oil, giving up the ghost this week, off a nearly 10%. A little bit of a unseasonably warm run, so probably having a little bit to do with that out there. Otherwise, heating oil, again, coming in at number 2 this week, off nearly 10%. And the big dog to the dark side this week. Not a spot you want, unless, of course, maybe you're rocking a little SVIX, a little inverse vol, or maybe you're rocking some VIX downside. I happen to be in that category, in which case, not too mad to see our number 1 downside mover this week, our old pal VIX, coming back to earth, nearly 12% this week, about 11.8%. Again, I know, percent of percent. All you vol heads, don't come at me. We've settled this many years ago on the network, but nonetheless, it is a tradable future. You have to delineate how much it moves, hence percent of a percent. And VIX off nearly 12% as we're recording this. So they are shellacking vol in the equity markets this week. All of this shellacking, is that amounting to a decently active day out there? Is it kind of a quiet, sleepy holiday eve Wednesday out there? Is everyone too busy traveling and getting mad at their brother-in-law and cooking turkey to bother slinging some futures? Let's find out, listeners. You know, on these Just the Facts Ma'am editions, we like to expand our top 10 to a top 15. But in general, we didn't even need to do that today because it was costing you over 400,000 contracts to break into the top 10 today. 405 to be precise. So that's actually pretty impressive volume out there on a pretty otherwise normally quiet period in the market. But you know what? Because you folks love it, and I see some products you folks love to sling here in the top 15, we will expand our top 10 this week. Coming in at number 15 this week, listeners, we've got our old pal, the Euro. We don't see the Euro coming in too often. Euro putting up 161,000 contracts for the number 15 spot. Number 14, here we go with some products you folks know and love. It's gold, 182,000 contracts on the tape today. By the way, a lot of March lighting it up out there, and a smattering of February. Gold is the February contract. Crude oil, number 13, our old pal WTI, just a tick under 200,000 contracts. That's the Jan contract for number 13. Number 12, out to the ags we go. It's the king of the ags. It's corn. This time, the March contracts were already all over the place. They're only at number 12, 290,000 contracts on the tape there. Number 11, to the rates we go. It's the Ultra T-Bond, also hanging out in March, 329,000 contracts. And now our official top 10 begins. It's 3-month SOFR coming in at number 10. Dees contract, 405,000 contracts on the tape. So again, an impressively busy day for a normally quiet session. Number 9, it's the NASDAQ. Again, going out to December, 485,000 contracts on the tape there. Number 8, back to rates we go. It's the 30-year, also going out to March. In fact, we're pretty much vacillating between March and Dees. For the rest of our list, number 8, the 30-year, 515,000 contracts on the tape. Number 7, to the Ultra 10-year we go, also March, 569,000 contracts on the tape. Number 6, getting a little bit closer to home on the yield curve, it's the 2-year, also March, 733,000 contracts exactly on the tape today. Don't see that too often. Number 5, to the equity landscape we go. Kicking it off with the S&P Micro Dees contract, 1.09 million contracts changing hands already today. Number 4, keeping it big. It's the S&P E-mini, still hanging out in Dees, 1.25 million contracts already changing hands today. Number 3, it's the 5-year. Back to March we go. 1.55 million contracts. And then to number 2. What is number 2 today? Is it the NASDAQ or is it the 10-year? What has taken the crown today? Number 2, drum roll, please. Yeah, it's the NASDAQ. Dees contract, 1.6 million contracts. That means the big dog out here again. The big dog just lighting up the tape out there today on a pretty active, surprisingly active day. It's the 10-year note going all the way out to March. 1.82 million contracts on the tape. Listeners, all right, surprisingly active day. Who had that on their bingo card for Thanksgiving Eve, listeners? But we're not done yet. We got to shake it up for the year. Let's kick it off. Let's go out to the upside again. Let's keep things positive. Let's see what's lighting up the tape to the upside. If you listen to any shows this year, you probably have a guess what's lighting up the upside this year. But you know what? Couple of surprises sneaking in there this week. Number 5, definitely not a surprise. It's our old pal gold, back to pretty much that 50% threshold, 50.33% to the upside for the year. Number 4, bit of a surprise sneaking in there. Our old pal dry whey, 55.3% to the good this year. Then the rest of our names, probably you can guess them. Number 3, it's palladium, up 55.9%. Number 2, it's platinum. Good year for platinum, up 70.5% and taking the top spot with a silver bullet. See what I did there? Yeah, it's silver, up 73.55%. Silver just stealing a march on gold and everything else this year, including platinum. For a while there, ETH was putting up a good fight. It has obviously given up the ghost there, so wild stuff. Silver doing things it hasn't done since the late 70s out there. So absolutely wild stuff. And it was being manipulated the last time, listeners. So wild stuff out there. To the downside we go. And to the other side of the dairy complex, we kick it off with our year-to-date losers list. It's non-fat dry milk coming in, number 5, off 18.4%. Followed by number 4, it's been a rough year for rough rice. That continues. Number 4, rough rice off 26.2%. Number 3, hanging out in cocoa off 40.1%. So again, if you're lamenting coffee, not sure if cocoa really fits that need, but if you need a hot beverage, maybe cocoa is your huckleberry. It's certainly cheaper. Number 2, keeping it in dairy. It's our old pal cash settled butter. So again, your coffee's more expensive, but the milk you're putting into that coffee and the bread you're eating for toast and the butter you're putting on that toast at number 2, certainly cheaper. Number 2, cash settled butter off 44.25%. If you switch to cocoa, man, you're crushing it. And then of course, your breakfast beverage of choice continues to get cheaper. It is still the number 1 spot. OJ off an impressive 64.25%. If you go to the local grocery store, does that gallon of OJ or half gallon of OJ, does it cost 2/3 less? Fun game to play. I'm guessing not. But intriguing stuff nonetheless out there in the world of OJ. And speaking of intriguing stuff, it's been a little while since we dug into some of these funky futures contracts. What better time to do that than on a truncated holiday week? So to the contract specs we go.
Have you ever looked at a futures product and said, "What the heck is that?" Let's find out together. It's time to get the contract specs.
All right, everybody. Welcome to the contract specs, the portion of the show where we explore the mysteries and the nuances of some interesting, maybe esoteric, maybe arcane futures contracts out there today. You could certainly label today's product as esoteric and arcane, but not exactly mysterious. A lot of people have heard of Solana. It is the newest addition to the CME crypto suite. We thought we'd go a little bit newer this time. We'll dive into the archives and some wild stuff on future episodes, but it seemed like a good time to talk some crypto on the show today. We just had the folks from CME on the sister program to this one, This Week in Futures Options, so you should check it out. They dove deep into their new Solana and XRP on that show. They listed both of those. We're just talking Solana here today. So if you want to deep dive into those products, what they are, why they listed them, make sure you check out This Week in Futures Options. Today, we're going deep into Solana. And again, we're just looking at this through the lens of the futures. I'm not going to spend a ton of time explaining what is the Solana blockchain or any of that kind of stuff. If you want to find that out, there are many, many sources for that. We're just going straight to the futures. Now, once again, as with everything pretty much new under the sun at CME these days, certainly everything in the crypto space, these Solana futures are once again cash settled, which does raise the question, is physical delivery, is physical settlement, is that dead in the crypto world? Doesn't seem like it's getting a lot of juice these days. And once again, these new Solana futures adding fuel to that fire. And once again, CME taking the two flavors approach to their new crypto products. You've got the big spicy meatball contract and then the smaller micro size contract. So we'll kick things off with the big Solana contract, then we'll drill a little bit down into the micro, which is probably the one most of you will be engaging with, even though the micro, not that small these days either. Let's kick things off talking about the big contract. And for all of these examples we're going to use later here on the segment, Solana's flirting around the 145, 150 level. Let's just keep things nice and easy for showtime. Solana will be priced at $150 for our examples here. All right, so the big Solana contract first. It's a big beefy boy. You're getting 500 Solana with that contract. So that is your multiplier there. Obviously not for your mom and pop Solana trader. It's really for the folks out there looking to issue an ETF, and they need a big futures contract against that. Maybe some large institutional players out there, but it's really not for a lot of the retail crowd. Obviously, when it's so many Solana on the contract, it's going to have a pretty hefty notional value. You folks know how to do that calculation by now. Solana hanging out at 150 for our examples. 500 Solana per every contract. So you multiply that out. That gives you a notional value for each contract of $75,000. So not a cheap contract, not the most expensive one they listed clearly, not even in the crypto space, but a beefy contract nonetheless. The minimum tick size for these contracts, both the big and the micro, it's going to be a nickel per Solana. So again, if you want to figure out the tick value, how much does the contract change in value for every tick in the underlying, it's going to be a nickel times 500 Solana, aka $25. So for every tick up and down in Solana, you're going to gain or lose $25. All right, let's go out and explore an example here. You go out today, you're feeling a little bit of upside, you're feeling a little bit of optimism in Solana. You come in, started the trading session, you buy one future for the price of 150, which is where Solana is trading right about right now. End of the session, not a great day. Solana gives up the ghost, gives up 10 handles at the end of your session. Again, not an unforeseeable development. We see it move around quite a bit intraday these days. So you bought one big Solana future and you lost 10 points. How much did you lose? Well, you can calculate that obviously a couple of different ways. The easy way, 10 points times 500 Solana. That means you lost $5,000. Pretty easy. Some folks really love to do it the tick size way. So go by ticks. If you want to do it that way, you can obviously do that as well. Obviously, a nickel per tick. So there's 20 ticks in a point. 10 points, that's 200 ticks. Times $25 per tick. Guess what? You lost the same amount, $5,000. So that's your big Solana future. Again, not really going to be the one most of you are fixing your trading attentions on. So let's move down a little bit, shall we, to the more bite-sized, perhaps the more flavorful contract. It's the micro Solana contract. This is going to be 1/20th the size of the big boy. So you can pretty much take everything we just talked about and divide by 20. Bam, we're done. You could probably figure out when I say that now, it's still a pretty sizable contract. 25 Solana is the multiplier for the micro contract. So every one lot, you're still doing 25 Solanas. That's still a decent notional value. Obviously, 25 times 150 equals $3,750. That is your notional value right around the time that you're listening to this show here, listeners. That also gives you a micro tick value of $1.25. So every tick of the micro future, you're going to gain or lose $1.25. So same example, you come in, start the session, you're feeling optimistic about Solana, you buy a one lot when Solana's at 150, end of the session, doesn't work out. Solana drops to 140, you lose 10 points. Same exact scenario. How much did you lose on the micro contract? Well, again, 10 points, but this time times only 25 Solana. That equals $250. Or you can go the tick route again, 200 ticks times $1.25. That equals $250 as well. Or if you want to just divide the big boy by 20, that all gets you to $250 at the end of the day. So interesting stuff out there. For a lot of you, I'm curious to know, is this 25 Solana, is that too many for you? Would you like an even smaller, more bite-sized micro contract out there? Or are you normally slinging 25 Solana at a time? I'm curious. Hit us up. Let us know. And speaking of hitting us up, let's get out of here with a little bit of the old holiday-inspired futures free-for-all.
Ring the bell. It's time to take on all comers in an epic Q&A battle royale. All questions can enter, but none can leave without an answer. It's time for the Futures Free-for-All.
All right, listeners, let's get down to business with the Futures Free-for-All. And this week's question is perhaps the most important that we have ever asked on this show, which is quite simply on this Thanksgiving Eve. And this was inspired by a debate we had earlier this week, a debate in air quotes, on our pro Q&A session, which was quite simply got into a discussion, a debate of holiday sides. What is your preferred side dish? Of course, there's your mashed potatoes, there's your stuffing, there's a whole bunch of other things people threw out there, green bean casserole. But a few folks threw out cranberry sauce, which raised the discussion of cranberry sauce. Is that a side? Or is it really just a glorified topping? I mean, do you take cranberry sauce and you just eat it out of the bowl straight up? Or do you put it on something? Probably your turkey, maybe your stuffing, maybe a few other things out there if you're wild. I mean, is cranberry sauce really just like a bowl of gravy, a bowl of cranberry sauce, a bowl of gravy? You know what? These are the deep mysteries of our time. What better question to ask during a truncated holiday week? So that's exactly what we did. We put it out to you folks. It just went live right before showtime. I do have to admit, the early results, a wee bit surprising to me. I tend to fall in the, it's kind of just a topping. I mean, I've never really sat there and just ate cranberry sauce. I've had mashed potatoes by themselves. I've had stuffing by themselves. I've had green bean casserole by themselves. I can eat a bowl of that, no problem. You gonna eat a bowl of cranberry sauce? Maybe. But right now, our audience in the early voting vehemently disagreeing with me. 2/3 saying cranberry sauce is a tasty side dish. Only 1/3 saying it's just a topping. And including our pro member, H. Del Aquarius, chiming in saying it's also the best part of the meal. Well, there you go. I guess I stand corrected, listeners. We'll keep this one live through the rest of this shortened holiday week. So if you get a little bored with the in-laws and everyone else, you want to make your voice heard on this seminal question of our time, follow us at Options to make your voice heard. All right, that is going to do it for the Futures Rundown for today. Not going to do it for us on the network, though. Not by a long shot. I will be back immediately in your ear holes talking all things Thor. Yes, the son of Odin himself. We're going to go deep into Norse mythology. Nope, it is our newest addition to the network, the Hot Options Report. We're going to break down a surprisingly wild and action-packed day here. I guess not everyone was busy traveling to the airport yet. They were busy slinging some options, and in this case, on this show, some futures today. So we're going to break down all that action coming up immediately after this show. So if you're hanging out in the pro, just hang out. You'll get that in your ear holes immediately. And then, of course, we're off throughout the rest of the week. Tomorrow, of course, Thanksgiving holiday, so no TWIFO, no option block. Hope everyone has a great time with friends and family, or just hanging out on your own if that's your way to celebrate out there. Friday, we'll be off as well. Only a shortened trading day, so not a monster. Not going to make people come in and do shows on those days, especially when they're out there fighting for deals. So we'll let you get those deals. Back again on Monday for the option block, hopefully full of tryptophan and turkey. And then back again next Wednesday to talk some more futures on the Futures Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.